Welcome to TMS Insights. It's almost Christmas 2020 and it's been an amazing year, Ben, and we want to bring our last TMS Insights video to our clients to wish you well and to give you information of what's gone on over the year and particularly the last month and to guide us into 2021. Ben, this has been one of the most ridiculous years for the share market. Had virtually everything you could imagine, and we end it with a smile on our faces.
Yeah, it's played out pretty well once we've got to December, but there's certainly been some periods of very high stress and a lot of work going on behind the scenes, I think, particularly in sort of March and April. We started off with a cracking January and February. You can sort of forget how strong the year was when it started. And then, of course, a near 40% drop in 28 days, which was extraordinary, and a V-shaped recovery, which was probably the least expected outcome, given where we were at and all of the news around COVID and then all of the health things that have happened as well and in the economy. It's incredible.
Yeah, so to bring it into that last month or so since our last video, obviously we know the vaccines and multiple vaccines are hitting markets and having a really positive impact. We are seeing still, though, heavy cases in the North Hemisphere and the COVID hasn't gone. But the hope from equity markets is 2021 will be a lot better for economies because the prospect of post-COVID has gone on. And just to point out to everybody, the November performance of the share market, this local market was up 10%.
Yeah.
That's one of the strongest months you could ever see.
Yeah.
And with the contribution of the first half of December, so far performance up 3.5%. We've now turned positive for the year on the ASX 200.
Yeah, it's amazing. I feel it's the strongest November in history on the Australian Stock Exchange, and I think it was the third or fourth strongest month in history. So, 10% is normally a great year, on the market. So, and it was, it was amazing. After that November, 7 straight up days in December, and you can feel the momentum. I've been saying to clients, I read a lot of the different good fund managers' quarterlies and their monthlies, and we watch a lot of the stuff that they say. And I can't remember fund managers as a group being so bullish on the on what's coming. It feels. I know a lot of people say to us, it feels like a massive disconnect. How kind of bad the news is and worrying things are at the moment versus what the market's doing. But yeah, the answer is always the market is looking to the future, and we're actually going to probably see one of the strongest periods of economic growth in the Australian economy next year and into 2022, and that's going to occur in the US and in Europe for a variety of reasons. And it hopefully will be a pretty good year next year.
And it's all benchmarked against the previous corresponding period, which is how you get these big numbers up and down, obviously. But even today, Ben, and we're getting the mid-year economic forecast comes up today, and the statement of the Australian economy comes up later today. So we don't have that for you now. But we do know the unemployment rate has gone down to 6.8%.
Yeah.
Now, when we were all growing up, that was a pretty good rate. It wasn't bad. It was certainly below trend.
Yes.
And so we are now seeing numbers at the end of the difficult year which give good hope for the start of next year.
Yeah. I mean, the big question, of course, is JobKeeper will roll off at some stage. And but where the country has been very fortunate is the iron ore price has been so strong that the budget deficit isn't nearly as big as it was forecast to be. And so the government does have some spending power up its sleeve to keep us, to push the economy through to that period where the country is largely vaccinated and easing of restrictions can really take place. So it's come together, amazingly well. And you read some statistics. I was watching Alan Cole on the news the other night. In an ANZ survey, they said that 40% of companies are now struggling to find workers. So there's all these weird knock-on effects.
They're not normal, that's for sure. So just to put the sectors in place, yes, you mentioned iron ore. That's been a really strong part of the market. BHP, Rio obviously hit terrific levels, and others, mineral resources, Deterra, something we've had a little of interest in since that spun out of Iluka. But the banks have come back into town, and maybe if you can touch on, travel stocks, which obviously had a big November, energy, education, they were the big ones. And there were a few losers as well, but not as many, really. Were
Yeah, I think you can see that the fund managers who really control the ebbs and the flows of the week to week, month to month movements of the market are very much of a view that the economy is really going to accelerate, and a lot of the businesses that are very reliant on a building and growing economy to grow their profits are the place to be, particularly because a lot of these stocks got hammered through the first half of the year, and in many cases have done very little for years and years and years and years in terms of their, you look at the banks as an example, NAB, Westpac, ANZ sort of trading where they weren't 5 or 10 years ago. And so it's kind of like those unloved parts of the market that are really turbocharging. Media is another big area. We've seen there, which has been in the doldrums for years. So there might, I suspect, I always favour trying to invest in businesses which can grow regardless of what the economy is doing. And I still think that style might underperform into next year because of what the fundies are chasing. But there'll be a period where it does come back again. And for the moment, it's largely just treaded water. It hasn't been sort of viciously sold off to fund that move.
No, that's right. So it's really those back to normal sorts of stocks and the money flowing in there.
Yeah.
In terms of what happens now, Ben, obviously we've been still very busy as it goes mid-December, but it'll start slowing down next week. We've had a lot of IPOs, haven't we?
Yeah.
So there's new listings coming on. We've seen quite a few takeovers as well.
And that'll accelerate next year.
Yeah. We go after Christmas, a few of those trusts go ex-dividend, so that sort of happens. And then we go into January, we'll get some profit updates, won't we, from some companies ahead of February reporting.
Yep. And, again, just to highlight what we were talking about, that disconnect between the market and the economy, and going back to what we've said through these videos right through the year, the share market is not the economy. The share market is the largest 50 companies in this country and what their profits are doing. And I'll give you an interesting statistic. In the second half of this calendar year, the number of upgrades, or the percentage of upgrades versus downgrades across the market, was the highest it has ever been. So that is extraordinary. So in this COVID environment, it's actually led to a lot of companies hitting great conditions rather than struggling for conditions. And what we also do know is that a lot of companies took costs out of their business through the COVID crisis, and as revenues are recovering, profits are coming back a lot faster.
And you can't underestimate the things we have been talking about, like low interest rates impacting on those companies enormously, encouraging them to invest for growth and getting that. And we did see two other things, Ben, which are worth knowing. 3 weeks ago, the highest level of US equity mutual fund inflows ever for a week, and the biggest drawdown on cash. And these are things we've talked about for a while.
Yep.
Cash rates are low, staying low. 10-year bonds are still under 1%, so it does point in favour of it. But it's been a big and busy year. We do think that people will rightfully have a little break on either side of Christmas. We're certainly looking forward to that at TMS, and it's been a big year. But we think everybody's going to come back swinging, and we look forward to a big start to 2021. So on behalf of Ben, myself, and all the team at TMS, thanks for your support this year. Have a great Christmas, a restful one. We look forward to speaking to you in 2021.